From the studios of Farm Journal Broadcast, this is AgDay.
Making grain storage work for you.
But there's always usually an advantage to storing grain.
Some advice before you finalize your marketing plans. As farmers face a potential tropical storm in the south, wildfires in the west.
We're getting explosive wildfires in areas that traditionally wouldn't be in that condition.
And high heat just about everywhere.
June is a bad time for a heat wave.
We're tracking it all right now on AgDay.
AgDay, presented by Pioneer. What's next happens when blood, sweat, and tears meet rain, wind, and sun. Pioneer. What's next happens here.
Good morning, I'm Clint Griffiths coming to you from our Farm Journal studios here in Kansas City, where our editors are gathering to talk about all of the hot button issues right now in farm country. And heat is top of mind with the first day of summer arriving today, while much of the country is dealing with a dangerous heat wave. Taking a look at this map, you can see in purple where extreme heat is forecast with moderate in orange, but as you can see, much of the country will be in the yellow category for some heat. Now, the National Weather Service saying this heat wave will continue to make its way across the country and on into Maine through tomorrow. USDA meteorologist Brad Rippey says temperatures could reach up to 95 degrees, but he says there will be some areas where temps will exceed 100 degrees. What could this mean for farmers and crops? Well, Rippey says the primary area of concern is in the south.
Notably, corn is starting to silk across the deep south, and over the next few days, this hot weather will accelerate crop development. So June is a bad time for a heat wave for corn across the southern United States. That is something we'll have to watch.
However, Rippey says the further north you go, including the Midwest, he says hotter temperatures this time of year should not have a detrimental impact on spring planted crops. And it's not just the heat. Other parts of the country are dealing with deadly wildfires, while we're also keeping an eye on a tropical storm in the Gulf. Laura Aguirre continues our team coverage.
I don't want to do it, but for safety reasons, I have to.
Surfside Beach is among a number of Texas ocean fronts closed on Wednesday. Tropical Storm Alberto, the first named storm of this year's Atlantic hurricane season, is around 185 miles off Tampico, Mexico. But it's sending heavy rain and a massive storm surge north.
Go down on the beach and you get sucked out. Ain't nobody gonna come help you.
Coastal cities like Galveston, Matagordo, and Corpus Christi already grappling with rising floodwaters pushed ashore by Alberto-fueled winds. Forecasters predict Alberto's impacts will spread across much of Texas now through Thursday, and also into New Mexico, where the rain could help crews battling devastating wildfires. Tens of thousands of acres in the state have been charred so far, along with hundreds of homes and businesses. Ruidoso is one of the villages where residents were forced to evacuate.
We don't know what's going to happen with our home.
We're in a really severe drought, but with the high temperatures, low humidities, and then we get wind, we're getting explosive wildfires in areas that traditionally wouldn't be in that condition.
Extreme heat and dry conditions also persist across the Midwest and Northeast Wednesday, with exceptionally high or record-breaking temperatures in many cities from Illinois up into Maine.
People will say, well, extreme weather has always occurred, and people agree, except that it's occurring at a frequency we've never seen.
I'm Laura Aguirre reporting for AgDay.
And this could help alleviate concerns about wildfires in the Oklahoma Panhandle. Oklahoma Mesonet reporting that heavy rain fell in Hooker, Goodwell, and Beaver on Wednesday, with totals hitting their 1,000-year rainfall mark. Meteorologists reporting Hooker broke its all-time daily rainfall record in less than 3 hours, getting a total of 6.9 inches of rain. Goodwill reporting 7.5 inches of rain in just 8 hours, and it was still raining on Thursday. The area not used to seeing that much rain in a short amount of time, with Guymon, Oklahoma usually only averaging about 20 inches of rain all year. Considering all of these things, let's get to the latest with today's weather and meteorologist Matt Engelbrecht. Matt?
Yeah, I want to give you that broad perspective. We just went through quite the heat wave. We continue to see quite the heat wave across a good portion of the United States. We're expecting warmer than average conditions, above normal temperatures, all the way through the end of June and the start of July. So let's go through July 2nd. You can see on the East Coast, all red, back into the Midwest, and then even a pocket over the Four Corners with all red as well. So I'm not talking a slight possibility. We're all the way on the right side of this legend, and with high confidence that we're going to have above average temperatures throughout nearly 2/3, if not 90% of the United States, and maybe some blue back up here into Seattle and Washington and the Northwest. And for the most part, it's all about the heat. It's also about trying to find the moisture as well. Now, in the immediate future, if we look at where we could see some stronger, if not severe thunderstorms, there you got just one little dot on the map. And then look to the right side of your screen up into the northeast with a few isolated or few thunderstorms, if not severe thunderstorms, possible. In Darcy, putting a wrap on planting, say they managed to get 95% of their crop in. They say it was a tough spring, and they're going straight to the sprayer. I'll have more in your forecast coming up.
We're learning more about why USDA said it's suspending avocado inspections in Mexico. Officials say 2 employees of USDA were assaulted and temporarily held by assailants. U.S. Ambassador Ken Salazar saying the assault occurred while they were inspecting avocados in Michoacan. Now, he said the employees were no longer being held, and he says inspections will be suspended until the safety issues can be resolved. A USDA spokesperson has said the agency is committed to resuming inspections as quickly as possible. Now, Brazil is upholding an 18% tariff on U.S. ethanol. The decision comes despite opposition from Brazil's Association of Fuel Importers, the U.S. government, and the U.S. ethanol industry, which all submitted comments calling for a permanent tariff removal. U.S. ethanol exports to Brazil peaked at just under 500 million gallons back in 2018, but took a big drop after a 20% tariff was announced by Brazil in 2017. Now, there was a 9-month suspension of the tariff that started in 2022 when U.S. ethanol exports rebounded in Brazil, but it was reinstated by the Brazilian government in January of last year, causing U.S. exports to tumble. Now, so far this year, less than 5,000 gallons have shipped to Brazil. However, the group say Brazil continues to ship ethanol to the U.S. duty-free. The Fed recently announced its decision about interest rates. We look into what that means for ag markets next, and later, the secret to making your grain bins work for you beyond basis in our special report, Old Hat, New Hat. The markets were closed on Wednesday to mark the Juneteenth holiday. AgDay's Michelle Rook recently talked with Darren Newsom of Barchart about the interest rate outlook and the impact on ag markets in Markets Now.
Joining us with markets, Darren Newsom, Senior Market Analyst with Barchart. Darren, let's talk a little bit about the interest rate, the inflation climate that we are seeing currently. Inflation is starting to cool a bit. So what does that mean for investment money and money flow in outside markets and even the ag sector?
Yeah, I think the biggest thing that it means right now is, okay, we're getting some signs, some official signs that inflation has cooled a little bit. We still have it. We know that. But if we look at long-term trends, we still see that the dollar is trending higher. We still see that the 10-year Treasury note futures are still trending higher. And we see U.S. stock indexes are trending higher. So the idea that inflation could be cooling certainly lends itself to the idea that, okay, we could still see possibly 1, maybe 2 rate cuts yet by the FOMC yet in 2024. There's 4 meetings left, so we're going to have to start seeing some action at some point. So that's kind of on the books as far as a possibility. And as far as commodities go, I think the biggest play could be over in the metal sector, maybe a little bit in the energy. I just don't know that it's going to have that big of an effect on the grains, even though, again, as we talked about, the U.S. dollar index is firming. I don't think that it'll have a huge impact on the grain trade, but certainly it could influence some of the investment money down the road.
Certainly, there's some economists that talk about grains as being a hedge against inflation. Are you in that camp? I mean, does that mean if inflation is cooling, that the investment community, the funds won't be interested at all in grains?
I think the funds are looking more at real fundamentals when it comes to where to move money in the commodity sector. Certainly the softs have been in the spotlight for the last couple of years. And, if we look at future spreads and forward curves in the grains sector, the subsector, the oilseed subsector certainly jumps out given all of the inverses that we see. So if there's a market set that could find some renewed investment buying, it does look like it could be over in the oil seeds. And again, so much is being made of the expected increase in crush demand here in the United States.
All right, thanks for joining us during Newsome with Bar Chart, and we'll have more AgDay coming up. Watch Markets Now with Michelle Rook on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.
To get in touch with Darren, send him an email at analysis@darrennewsome.com or give him a call at 402-669-0210.
Coming up for our Thursday, as we've been outlining, you got the chance of some heavier downpours, the flooding potential into parts of Nebraska and Minnesota, all having to do with where the center of that ridge of high pressure is located. And no surprise here, it's going to be back down over near Tennessee. So we get these ridge riders that could produce some stronger thunderstorms, if not some heavy downpours. And as we talked about yesterday and the day before, this is going to be more your standard thunderstorm complex. Down here to the south, there's a couple of tropical systems that could bring substantial rainfall back into Texas and also the Big Bend area out here into West Texas. Again, that's the flooding potential on Thursday. On Friday, without that ridge breaking down, without the pattern shifting, you keep a 15 to 40% chance of some flooding or possible flooding in and across the same location. In terms of the tropical weather, or at least the tropical rainfall, staying down near the southern part of Texas. They got just a little green dot up there into the northeast, 5 to 15% chance of some flooding on Friday. Let's go take a look at what's going on in the jet stream. So as I mentioned, where you have that saddle point, last couple of days, this isn't moving all that much with this ridge of high pressure here. So we look at the jet stream for Thursday, Friday, and Saturday, and you can see it fluctuates a little bit, but right along this trough or this shallow trough up here to the northwest, and also this ridge of high pressure back down here to the south and to the southeast. That's why we continue to have the chance of some rain, some heavy rain, perhaps even some isolated thunderstorms there, and then once again to the northeast as well. So this is Friday. I hit the button through your Saturday and Sunday. Not much in the way of a pattern shift. A shallow trough comes through to kind of break things up, but we go right back into more heat next week. Beaufort, North Carolina, not Beaufort, North Carolina. Partly cloudy, high around 84 degrees. Don't say Beaufort or Beaufort, North Carolina. A low of about 72 degrees. David City, Nebraska, scattered thunderstorms, high about 82. And then in Maine, you got some evening thunderstorms. Check out that high, 95 degrees.
There may be a new country at the top spot for buying U.S. ag products. See how sales of beef factor in, and later getting the most out of your grain marketing plan by putting those grain bins to work for you. There could be a new top buyer of U.S. ag goods this year. USDA expects China to fall to the number 3 spot, and it's Mexico that could climb to the top spot. Canada could rise to number 2. Now, USDA's latest outlook of agricultural trade points to a growing trade deficit. It's expected to increase to $32 billion in 2024. That's an increase of $1.5 billion from February. China, it's expected to fall to $27.7 billion, which would take them to the 3rd largest buyer of U.S. ag goods. But exports to Mexico are booming, rising $30 million this year to $28.7 billion. Some of that is thanks to record red meat exports to Mexico.
One of the factors that is tying into this trade deficit is the strong U.S. dollar globally. And we've really seen it hit us hard in Asia. Japan in particular. And, the interesting thing is that Japan actually had a growth month in April. And that's with almost a $160, U.S. yen to the dollar, which is like a 30-year low. So the fact that Japan is up 3%, I think it was, on pork and 6% on beef in April, to me, that's another good sign, because that's with an extremely strong dollar, which in yen terms makes our product more expensive.
ERS says meat exports have been a bright spot. It says the U.S. is struggling with soybeans and corn exports, where there's more global competition. USDA is predicting very small changes in beef production this year. Experts say it's due to higher carcass weights offset by reduced marketings, and USDA analysts say that could lead to changes next year when it comes to beef production.
Current year pushing those placements and marketings into next year. So for 2025, we raised our beef production forecast by 250 million pounds.
Steer carcass weights are also expected to be high next year, which contributes to the higher production forecast. But they say beef production overall is expected to be down about 1.2 billion pounds next year. Are you missing something important when it comes to your grain marketing strategy? How you can quickly make back your investment on your grain bin as we continue our series of special reports, Old Hat, New Hat, next.
Old Hat, New Hat is brought to you exclusively by AGI. Grain handling, grain storage, grain leadership. AGI brings it all to your farm. Learn more today at aggrowth.com.
Grain storage can be used as a marketing tool to allow farmers to wait for higher prices in order to sell their crops. Well, AgDay's Michelle Rook, she looks at how on-farm storage can be an asset to farmers, especially in this lower price environment.
Most farmers will tell you that the investment that they've made in on-farm grain storage systems is paid back quickly, and so it's a big part of their grain marketing strategy. Today's massive on-farm grain storage systems are status quo in many operations. The bins alone can cost from $2.25 to $3 a bushel to construct, according to farmer and market analyst John Sheave.
If you have that cost and you spread that out over 10 years, even with today's interest payments, you're looking at a cost of about 30 to 40 cents a bushel per year to make your payments.
However, he says farmers can use those bins to store their grain over the winter and quickly pay back that investment.
The most important thing is that the carry in the market pays for all of your interest to store the corn from, say, harvest until the following summer.
Sheave says the carry for corn is there about 90% of the time and amounted to around a 35-cent per bushel profit on corn stored at his farm in southeast Nebraska. And that doesn't take into account the basis appreciation.
You look at how low basis is at harvest, and, most areas of the country, not all, most of them are going to be looking at about a 30 under basis come harvest time. And then it typically rallies about 30, 40 cents. So you make that basis appreciation there and you capture the carry, which, to be fair, to capture carry, the only way you can do that is you do have to sell the crops.
So when Sheave sold his 2023 corn crop this spring, he gained a total profit of 70 cents per bushel.
This is the big
David Struck says they've also used that strategy successfully many seasons, utilizing their on-farm grain storage.
We've got a lot of storage on the place. Our corn is always stored. We never sell corn at harvest. Sometimes beans will carry that into June. Sometimes we move them in July. It depends upon what the market tells us what to do, but there's always usually an advantage to storing grain.
Struck also uses storage to wait for better cash bids.
Our basis has been wide all the time. Usually when we get past harvest, our basis will close up and our price will go up, and so storage almost always pays.
In most areas of the U.S., Sheave says on-farm storage is a better value than commercial storage, which runs from 5 to 8 cents per bushel per month, is storing from harvest to the following July, or roughly 9 months.
9 months times 5, that's a minimum of 45 cents, potentially as high as 70. The market doesn't pay that much, but your bin payment was only going to be 30, 40 cents. So after 6 months of storage, you're making more money having it in your own bin and making your own bin payment.
And once a bin is paid for, Sheaves says it's like free storage.
You have it paid off after 10 years. I mean, the life of a grain bin is going to be, I don't know, we've got bins that are 50 years old. So I would say that you've got a long time to just make pure profit on that.
And with lower grain prices this year, Sheaves says there are more farmers storing grain on the farm and waiting for a rally. I'm Michelle Rook reporting for AgDay.
All right, thanks, Michelle. And that's all the time we have this morning. We're sure glad you tuned in. From all of us here at AgDay, I'm Clinton Griffiths. Have a great day on Farm Country.